Howdy y'all. Hope you're having a great day. Silver Trade here again with another video. And we have a ton to cover. So just to start off, retail investors own around 60% of GameStop, while institutional investors own about 27%. We'll round up, call it 90%, so 90% is already owned. XRT is at 486.47% short, which is quite a lot. And for anybody that doesn't know, way back in 2021, we saw XRT reach all the way up to 1,300% short. Now we're only at about 500%. That's almost about half as much as back in 2021, and I've always been a glass half full kind of guy. Today, somebody put $674,000 on the January 17th, 2025 $35 calls. So somebody with a lot of money is pretty excited for January. I wonder why. We're going to talk about that. On May 9th, after 3 years of hibernation, Keith Gill suddenly liked a tweet of a famous scene in the film Run Lola Run, when the protagonist bet on the roulette number 20 and won. And then on May 12th, Gill sent a meme, "Now it got serious." May 13th, in the pre-market before market opens, GME exploded to $80 per share. As private investors do not normally have access to pre-markets, they could not have driven up the price movement so much. Maybe this was Gill. Back on May 13th, let's not forget Berkshire Hathaway plummeted all the way down to a couple dollars a share from $600,000. There was obviously some quote-unquote glitch going on between BRKA and GME. From the 12th to the 17th of May, Gill posted a total of 110 memes. 110, that's pretty important. At the same time, about 90% of the trades ran through the far less regulated OTC market, which retail investors don't normally have access to either, and GME quickly fell to a steady $20 per share. In mid-May, huge calls for over 12 million shares opened at $20. Again, just like the bet in Run Lola Run. Then on May 17th, GameStop sold 45 million new shares on the market and doubled the savings to $2 billion. It was similar to the same move Cohen had made in April and June of 2021. As GME surged, GameStop sold $1.5 billion worth of new stock. However, the DRS and 8 movement was critical of the dilution, even though GameStop has more cash. On June 2nd, Gill reveals that he holds 5 million in shares and 12 million shares worth of calls. But how did Gill time his return? Probably by analyzing calls. It makes sense for short sellers to buy calls, potential shares, if they want the balance sheet to look balanced. Leaps are a type of call that can run for up to 39 months. Exactly 39 months before May 2024 was February 2021, when GME was shorted down to $10. In March of 2021, GME was pushed down again. These leaps' expiration would be on June 2024. If the theory was correct, his calls maintained such a high share price that short sellers couldn't buy new cheap leaps when the old ones expired. At the same time, it turned out that swaps for $2 billion had expired in 2024. Short sellers must have had a hard time hiding the phantom shares. Just bear with me, please. You'll see how all this ties back into itself. On June 5th, Jim Cramer interviewed SEC Chairman Gary Gensler, and Cramer accused Gill of market manipulation, but Gensler ruled that everyone is free to talk about what they buy. And it's super ironic that Jim Cramer would be giving Gill crap about stock manipulation when Jim Cramer was on TV telling everyone to check out Bear Stearns right before 2008. According to financial media, the Wall Street Journal E-Trade talked about throwing Gill off their platform, which was denied. Maybe E-Trade didn't have real shares for Kitty. On June 6th, Gill announced a new live stream. Thousands of investors poured in and GME rose to $65 per share. Everyone was restlessly waiting for June 7th. It would be the 5th anniversary of Gill's very first purchase of GameStop, and oddly enough, the 25th anniversary of Run Lola Run. On June 7th, GameStop sold an additional 75 million new shares on the market. The savings doubled again and were now well over $4 billion, with 426 million shares in play on the market. GME had been diluted by 40% in the previous weeks, but the savings had quadrupled. A very sensible barter for the company. The critical voices grew over the dilution, but the insiders' investments had also been diluted. In addition, insiders had primarily sold shares for tax reasons for years. Cohen and the board were personally invested in a long-term strategy, and they clearly knew how to do it. By the evening of June 7th, over 600,000 people were tuning in to Gill's channel and millions of viewers were watching the live stream on CNBC. Gill enjoyed himself with people on the chat showing his long position and told E-Trade, "I see those headlines, don't make me remove it." Gill expressed confidence in Cohen's chairmanship and GameStop's transformation. Most importantly, Gill demonstrated on live TV that he did not have control that the financial media claimed. Time and time again, the stock price changed instantly based on Gill's carefully chosen words and phrases. It's impossible for Gill to be pulling the strings. During after hours, GME inexplicably jumped between $30 and $60 a share. Gill's calls for 12 million shares, GameStop sale of 45 million new stock, and the market maker's tons of FTDs approached delivery and suddenly caused the algorithms to lose control of GME. On June 13th, Gill had sold his GME calls and bought another 4 million shares, so now he held 9,001,000 shares, which is the exact same amount that Ryan Cohen had back in 2020 when he increased his position. Gill could have sold for $1 billion on May 13th, but he chose instead to hold and increase his position a month later. Gill's choice turned out to be about the FTDs. Market makers are legally obligated to deliver shares from traded calls within 1 to 2 days, but delivery of shares from normal purchases must be delayed as FTDs for up to 35 days. An analyst from 2024 actually showed that since 2012, market makers had naked shorted GME with uncontrolled loans from ETFs like XRT. This shorting created a cycle of FTDs to be closed after no later than 35 days. This was supported by a thorough analyst from 2022, which showed that only 2 shares, including Tesla, and 9 ETFs, including XRT, out of the market's approximate 38,000, had more FTDs than GME in the previous 10 years. On June 2nd, when Gill revealed his position, he also sent the first 10 new memes. An UNA reverse card, the cycle of FTDs would soon enforce, not suppress, price discovery. By buying calls in April, Gill started a cycle and observed FTDs being delivered. This allowed Gill to predict price movements and thus when to either buy calls underpinning GME or sell calls and buy stock, starting a new cycle that accumulated FTDs. It was interesting here that the share sales on May 17th and June 7th both happened on the first day of the new cycle. Cohen probably knew GME was diluted by phantom shares, and that's why they're converting it to equity. At the same time, it turned out that the price developments in August, September of 2020 and May and June of 2024 mirrored each other. If the trend continues, January 2021 would be repeated in mid-October of 2024. However, the share price in July did not continue up as expected, and the explanation was hidden in another of the 10 new memes. From June 17th, this was showing Bruno from the film Encanto, who hid for 10 years and returned with a green vision. In the world of stocks, a green candle means that the price will rise. If the 10 years meant Gill waited 10 weeks, he would return by August 30th. It showed the FTDs from ETFs most often started a cycle, but that the closing of the cycle's FTDs only affected the share price in certain periods. However, the dog in Gill's tweet was looking to the right, the wrong way compared to the dog in the video. It was a sign that he was going to perform a Kansas City shuffle, a deceptive trick from the movie Lucky November 11. Here the opponents, short sellers, think they are about to win, naked shorting, but in fact they are looking the wrong way and unknowingly steering towards their downfall. An obvious candidate was Cohen's old pet company, Chewy. On May 29th, Chewy had announced a share buyback and the ETF XRT was restructured with Chewy as its largest position. On June 24th, Gill suddenly bought calls for 20 million Chewy shares, and on June 27th, he sent the dog. On July 1st, Gill sold his calls and bought 9,001,000 shares for the second time. A clear nod to Cohen. This pushed XRT to deliver tons of FTDs to close by August 5th. Just on August 5th, Japan raised the interest rate of the yen for the first time in 10 years, which caused a global mini crash. Incredibly, Gill had predicted the crash in his live stream on June 7th, the background image showing the Japanese parliament working frantically as a green candle loomed. This little tweet. That's when he called it. Although the crash only lasted a day, it managed to create billions of FTDs that were to be closed by September 9th. Such a large amount of FTDs in the global system had coincidentally foreshadowed that GME would soon increase greatly. However, there would be another event on September 9th, a merger. The next emoji on the timeline was the American flag with a microphone on it. It was the only emoji that was made up of 2 others. On June 17th, the 2 companies SiriusXM and Liberty Media had actually announced a 10-to-1 merger. And on the same day, at 1:10, Gil sent a meme with the witty pun, "You cannot be serious." Then on July 31st, someone suddenly bought calls for 50 million Cyrus shares. And here is Roaring Kitty quoting 110 again, just like in his Sand Dune meme that was exactly 1 minute and 10 seconds, and just like his 110 memes that he posted. Gil had misled the algorithms that ran GME into misusing ETFs against the wrong stock, Chewy, inadvertently setting a time bomb under himself that would go off when his shuffle began in earnest. It also turns out that Cyrus means dog star. The flag on the timeline could refer to September 9th, but why was the merger important, and when would we reach the fire emoji? On August 30th, GME had its biggest increase, 9% since May 13th. That was 110 days after Gil posted the first of the original 110 memes, and 10 weeks equivalent to 10 new memes after the Bruno meme. It was striking that the last 10 new memes showed a naked Wolverine from the X-Men film universe fighting for his life. Maybe the market maker Wolverine is getting another margin call. And so GameStop had its best day since May 13th, 110 days after Gil posted his memes. On September 6th, Gil posted another new meme, 121, a toy dog dropped on the floor. The dog's eyes looked to the left. Gil's shuffle was in progress. Now his meme of the song "Dog Days Are Over" suddenly made sense. The term meant that the hard times were over, but here is also marked that Chewy had served his purpose. The algorithms had focused on Chewy, thereby putting XRT out of the game. Profits from Chewy would go to GME so Gil could buy new calls when the time was right. Another important detail was that Gil's famous timeline of the emojis actually appeared in a video when shown the dog and the flag. These emojis were briefly gray and then changed to color. It was a clear reference to a well-known scene from The Wizard of Oz when the film changed from black and white to color. You were no longer in Kansas. Gil's shuffle was only complete when both emojis had played their part. Through September, Cyrus stock fell, so it seemed likely that the link between the merger and the flag had also been part of the deception. What could the flag and microphone refer to? The answer came on the same day, September 6th, when someone bought 6,399 GameStop calls. The number 6399 is a well-known sign from a guardian angel. And this 6,399 calls were bought in Massachusetts. It's common knowledge that ETFs restructure their positions on the last Friday of each quarter. Here on September 20th, after the dilution in May and June, there was 40% more GameStop stock in play, but the ETFs should have already accounted for these dilutions on June 21st, so there had been to be another better explanation for sudden violent share buying. September 20th was 110 days after June 2nd, when Gil revealed himself and sent an Uno reverse card. The effects of Gil's May and June stock and calls was finally kicking in, and it looked like Wolverine had gotten a margin call. September 20th was 110 days after June 2nd, when Gil revealed himself and sent an Uno reverse card. It's also known that FINRA's Rex code 068 could give certain types of unstable players a 3-week extension to resolve margin calls, like a market maker. If the issue had not been resolved, the position would be forcibly closed over the next 2 weeks. This system explains the mechanism and timing behind both January 2021 and May-June of 2024 crystal clear. The price increase on August 30th indicates the Wolverine had received a margin call, which explained the stock purchase on September 20th. Exactly 3 weeks later, it would also explain why stock trading in these 3 weeks had been bone dry. If you counted 35 days and a good 2 months behind, a margin call on August 30th would originate from May 24th. Just a week before Gil revealed his 12 million shares worth of calls. E-Trade and Wolverine were naked and suddenly forced to buy millions of shares before October 4th at the end of the cycle from August 30th. At the same time, they had to prevent GME from rising so no more margin calls come. The timing held another possibility, tinfoil hat warning. If Credit Suisse UBS had bought leaps that offset their short position from June 30th, 2021, they would expire on September 30th and October 1st, was 110 days after June 13th. If this short position, 70% of GME, suddenly became red for UBS, they risk a margin call. This would start the cycle of FTDs, which according to the DTCC's rules could be postponed until the 13th of January, 2025. After the position would be closed by the deadline of January 27th. It was both striking that 3 cycles after October 14th hit January 27th, and that the 100 days after September 30th would be in the middle of the forced shutdown. All FTDs from the cycles Gil had started would hit at the same time, on January 27th. From Cyrus, Chewy, XRT. Maybe costs, maybe more we're not even thinking of. And if you were to go to January 27th and then go backwards 110 days, that would give you October 9th. I wonder if Roaring Kitty is planning on posting on October 9th just to have 110 days later, it'll be January 27th, and that'll be all of his pieces of his puzzle coming together on the same day. The theory was supported by a cryptic message on September 13th, exactly 4 months after Gil sent the first of his 110 memes. His brother posted a picture online with the text midway. After another 4 months, it would be the 13th of January 2025. Roaring Kitty's brother posted midway, the 13th of January 2025, when UBS's final margin call presumably would arrive. I mean, a lot of numbers are lining up. Gil was obviously exploiting a set of complex rules that few understood to manipulate a corrupt system that was controlled by near unstoppable algorithms. Algorithms that were introduced decades ago and now pretty much run our whole market. The whole timeline predicted MOAS in January 2025. Minor notes: the possible purchase of GME calls in May has been backtracked to approximately 24th of May. And the possible exercise purchase of Cyrus shares has been backtracked to approximately 12th of August. It was known that the sales of 120 million shares in May and June had hardly increased the 10 largest institutional long positions, but the shares had probably moved to close short positions and postpone FTDs. Sample from 2021 had shown that there were over 6 times too many shares in play. So even if GameStop sold its remaining stock of approximately 570 million shares, there would still be naked short sellers left. MOAS could easily make GameStop one of the richest companies, and if Cohen then issues a cash dividend, the short sellers would have to pay the investors for every single phantom share. And that's a huge possibility. I mean, they have enough cash that a dividend would be completely in the question. At the same time, as there was speculation about how January 2021 would repeat itself another time parallel unfold, on June 21, 2007, the Japanese yen peaked. 110 days later, the S&P 500 index peaked. After this, the market began to crash, and the bottom was only hit in March 2009, after a fall of over 50% in 2024. On July 2nd, the yen peaked again, and 35 days later, the Japanese crash hit. The price trend continues to mirror 2007, and if the trend continues, the S&P 500 will peak in about October 20th, 2024, 110 days later, and predict a new global economic crisis. There's a ton of fears right now with the general market, with the Fed cutting rates while the yen trade's unfolding just like it did back in 2007. A lot of people are getting prepared for American indexes to take a pull back. That's going to bring more people to GME because that's a great hedge against the entire market going down. Oh my goodness, and I am sorry about this video being so long, guys. GameStop had earnings on September 10th of 2024. They were expecting a loss, but actually had a surprise beat of 1 penny per share. 110 days from earnings would put us at December 29th of 24. And it's pretty crazy that we had zero reaction with a surprise beat on earnings. But 110 days later is December 29th. Right here, 7/17th. Pretty much where all the momentum from GME faded off. 110 days from then will be November 4th of 2024. I can't say this enough because I'm excited about it, but January 27th, 110 days before then, is October 9th. I wonder if Roaring Kitty is going to post something on October 9th just to kind of get a fire going in the algorithms for 110 days later. The first time the yen carry trade was mentioned this year was by Charles Schwab on August 12th. 110 days after that would be November 30th. On 9/20, that was 110 days after Roaring Kitty had posted the Uno reverse card. And we saw a 12% day and a huge spike in volume. There was a guy on Reddit who was talking to a manager at GameStop, and that manager at GameStop said, come October 8th, they're going to start at every GameStop grading cards for customers. And if you know anything about trading cards or trading magazines, it's a pain in the butt and way more expensive than $12 to get a card graded. But if you take it to GameStop, it's only $12 and they'll grade it for you. Very, very exciting. GameStop is the only reliable place to actually trade trading cards, and if they just keep leaning into this market, they're going to do better and better. Okay, and so I'll just summarize this one to try to hurry up the video for y'all. This guy right here, James Janey, only makes a video every so often. He didn't make a video for a whole year, and then out of nowhere releases 2 hour-long videos on GameStop. This crypto video right here, he released it on January 1st, and he said it was a scam right at the bottom of the market. Now he's waited a year, released 2 videos about GameStop. Maybe this guy knows that there's going to be a lot of eyes on GameStop very soon, and so that's why he's putting out these videos, just because he knows there's going to be a lot of attention coming to GameStop soon. I mean, it doesn't make a whole lot of sense to wait a year on such nice videos and then release 2 videos in the same week on GameStop. Unless he's got a reason. And he's also got 2 million subs. I mean, like, he's pulling a lot of eyes towards GameStop. But I really, really appreciate you guys. I hope you had a great day. Thank you so much if you made it this far. God bless you. Thank you.